James Tierney, TierneyEducation.com here on the Tierney Education YouTube page on a Thursday where the BLS has dropped the most recent inflation data. And what I figured we would do today is go through and just talk about some of the data that we were shown this morning and what that means going forward and some of the commentary. I was going to do this as a live stream, but I don't have my screen sharing software set up yet. My OBS is on the other computer. So I figured we would just make this video and then post it with no edits or anything like that because honestly, just don't have enough time to do that. So let's get into it. All right, so here is the homepage for bls.gov/home. So it's the homepage. And you can see that the CPI data has come out. That's the top article. So we're just going to click on it. It was released this morning at 8:30, which it does come out on Thursdays once a month at 8:30 a.m. Eastern time. And so what does this say? So when you click on it, you get the whole news release. We'll start right from the top and let's just talk a little bit about what's going on. So here you go. It's for October 2022, right? And so this talks about the CPI Consumer Price Index, and this is all consumers. So what this is officially CPI use. This is everything. We'll talk about a different way that we kind of categorize CPI with what we call core CPI later on. And it rose 0.4% in October. Now, you may be thinking, well, I saw that the inflation rate was much higher than that. That is because this right here rose 0.4% in October. That is just the October change. So that's the talking about how prices are changing just in the month itself. Month over month. Versus what we talk about the inflation rate, you can see the inflation index increased 7.7 before a seasonal adjustment over the last 12 months. That's where we are going to see the inflation rate that all the news and everything will be happening. And that is because the inflation rate is the year over year change, the percentage change from one year to the next when it comes to the inflation rate. They'll give you a little bit of other data, a little bit of other commentary here. So it shows that the index for shelter is contributing for over half of the items increase. And gasoline and food are also very high. So the energy index, which is kind of all types of energy, gasoline, all that other stuff, increased 1.8% over that month. That's a lot for a single month. And what you can see is the food index 0.6%, which is higher than the 0.4, right? And the food at home also being 0.4. So they talk about this index for all items less food and energy. So that's without food and energy. We call that core CPI. So with core CPI, that rose 0.3, so a little less. So it rose a little less, right? 0.3 versus 0.4. So that is showing that the energy and food is bringing up our prices more than all of the other items. So if we want to see, also they're talking a lot about how it's not as high as the previous month. Now we can't say that we're really in what we would call a disinflation, right? So disinflation is when prices are going up, but they're going up at a lower rate. I wouldn't really say that we're in that period just yet, since it's only a couple of months of data. But if we continue on this path, then we will see what we call disinflation, which is where the inflation rate is still positive, but it's declining month over month. And so you'll say that you see how they said that here. Where it rose 0.6% in September, but now it's 0.3% in October. So the all items index, we've already talked 7.7% for the 12 months. It was the smallest since January of 2022. So again, it's coming down, we're looking at. But again, it's just a couple months. So it's hard to really say we're in this disinflation period. All items, right, 6.3 over the last 12 months. So that's my core CPI, right, where it says less food and energy. That's core CPI. The energy index, look at that, 17.6% for 12 months ending in October. Food index, 10.9% over the last year. They all are smaller than the period ended in September. So to me, this is the economists at the BLS and the Department of Labor kind of pushing us towards this idea that we may be seeing some disinflation. This also makes sense for those of you who have been keeping up with the Federal Reserve. The Fed has said that it's going to most likely raise the target interest rate by 50 basis points next meeting instead of what it's been doing recently, 75. So, we're still seeing that inflation. They still want to pull it back, but maybe not as much, and they're seeing it to start to come back down. So that's the main summary, right? This is the main summary. So there's a lot of good details in here. What the first table shows us is it shows us different items. It shows us different items and it shows where these price increases are coming from. So again, here's our unadjusted month to month or year to year. So this is the unadjusted year to year over here. This is all month and how it's changing month to month. But really, what we always look at over here in this far right column, that's going to be our inflation rate. And what you'll notice is the all items, like we talked about, was 7.7. So that's the headline number that you're going to see all over the CNNs and the Fox Newses and the Twitters and all that type of stuff. You can see what happens to be the highest. So you can see a lot of these are much higher than 7.7, but those are food, energy, and within energy, you can see the year over year is just a lot. And month right here with fuel oil, very very high with fuel oil. You can see there's a little note here. So we can click to the jump to the food if we want, and it just talks about all that food and energy, and you can get to other more data, which is always fun. Which is always fun. As we continue to scroll down, we can see all the food, less food and energy. A lot of those are a lot smaller, even getting to like used cars coming back down, right? We've seen used cars starting to come back down. So negative numbers would be deflation for those categories itself. Obviously, we're not seeing deflation in the economy as a whole, but just for a few of these categories. And that has now year over year been our kind of target range of 2%. So if everything is following used cars, which I would say that it's not, but if it was, we may be getting back to that level. We are seeing that there's some transportation services still high, but again, coming back down, we're not seeing the 3%, the 1%, the 2% month over month. It's back down to 0.8. So we'll see how things go. So it does look like things are trending in that disinflation, but we'll see how things go. If you just keep scrolling down, they'll talk about a bunch of technical things, what it really means, and you can read through these. I'm not going to read through all of it. It goes through the brief explanation. They talk about how everything is calculated, what the adjustments are, how they do all this stuff. Down here, you can actually. I love looking at table 2, so I want to click on table 2 just to show you what it is. And this is where you can start to really nerd out on the CPI data and the inflation data. Here, this relative importance for that for September of 2022. Oh yeah, here it is. Yeah, so it does say the seasonally adjusted percentage change month over month, and then this is the unadjusted. This is showing, right? This is 100%. All of these numbers would add up to 100%. Think of this as the percentage of that item in the basket of goods and services that we are looking at, which, by definition is what the average urban family of 4 is consuming. Like this is saying food in general, about 13.7%, the average urban family of 4. Now, of course, this is not, there's outliers. Like some families, especially those on the lower income scale, spend a much higher percentage of their income on food and energy, which is why there is a lot of studies and a lot of people looking at how the inflation rate is not a great indicator for price changes for certain categories of individuals, like those who are low income, or those who may have less access to space, meaning that they need to use more transportation services and they need to use more energy. So there's lots of stuff, and that's going to be a different video, maybe someday. This is just going over what we see here with the CPI for urban consumers. And this relative importance, that's just all that stuff is going to add up. So this is really interesting because you can like really dig down into everything, like go all the way down to cookies, right? Cookies month to month is 0.3. You can go and see like, oh, is it meat that's driving it? Like, so remember this one right here, October to October. So we want to see this unadjusted percentage change. This is my annual change. So this column right here, you might be interested in seeing what's really going up, and you can see all that food. We've seen food increasing by a lot. Uh, why is this the case? So there's a few different explanations, right? There are some climate change stuff that's going on. We can have lower, worse crops that are going, especially I was listening to one of my podcasts this morning. It talked about potatoes in the Northwest because they've had some really dry weather in the Pacific Northwest of the United States. So that's raised those prices. And of course, there's still supply chain issues. There's still a lot of demand for things coming out of the pandemic. So a lot of things are pushing this up. And of course, we did see a lot of injection of liquidity into markets. So we can't discount that as well. But I would always caution if anybody is saying it's one specific thing. If someone's like, oh, it's because of the injection of liquidity into the United States monetary markets, or if they say it's all supply chain or it's all weather related. There's just a lot of things that are pushing up pricing, and we'll see how that goes. Of course, when you can see other parts that may not be increasing year over year, so we might see certain parts of food as you get into this meat area, not as high as maybe we were seeing with some other food at home categories. We can keep scrolling down and seeing we've got poultry, uncooked poultry, including turkey. Ooh, that with Thanksgiving coming up, that's going to not be happy for people that are buying their turkeys. We see eggs 43% year over year. That's just astounding to me when you just to think about it. So we can keep scrolling. Anything that looks interesting to us that we want to look at. Other beverages, non-alcoholic beverages. Oh, where's the alcoholic beverages? Did they even say that? No, this is just all non-alcoholic beverage. I'm sure down here there's more alcohol if that's something you were interested in. Here's food away from home. What was this? Food at employee sites and schools up 100, almost double. Wow, that's interesting. That's interesting. I wonder why that's the case. I wonder if that's like because of free lunches and stuff. I mean, it's probably in one of these footnotes. Let's look. Nope, wasn't in that. Oh, that's all that is. Nah. Okay. As you continue to scroll down, I think it's super interesting, and I'll link in the chat where you can go and see this exact thing. If we scroll back up, now we're in energy. Again, you can see the energy has just been so hitting people so hard. Right, everything up over 15% or so, except for propane and firewood, but still, like 6% still a lot. So energy is crushed, especially as we head into the winter months. This is going to hurt a lot of families who are on a very tight budget or even a fixed income. Which after the midterms this week, I am a little surprised that we didn't see more hitting on inflation. We saw a lot of it in the ads and stuff, but I thought we would see even more than what we saw. Now, if we're looking at foods, less food and energy, you'd see a lot of the stuff is the items less food and energy. A lot of it is a lot lower. Everything's pretty much lower. Floor coverings, furniture, that stuff's a little higher. That's probably still to do with supply chain and shipping issues, right? Things that are going to be a lot of money to ship are going to use some more energy, and so that's going to kind of feed into this. We have a good chunk here with cleaning paper products, all that stuff still year over year, still up in that 10%. We get into apparel. Things seem to have calmed down in apparel. Everything's kind of around that 2 to 5% mark. Yeah, everything looking in home goods is looking that way. Vehicles are coming back down, right? New cars they're still expensive, but not as what we had seen over the last couple of years during the pandemic. Medical care and prescription drugs are kind of back down to where we normally like to see them. Of course, recreational, right? The demand for a bunch of recreational stuff has declined, so we're seeing prices start to go down with that. We are seeing pet prices back up again, and that's probably because a lot of work from home. People are spending more time with their pets. They're spending more money. That's just an increase in demand. We see prices go up with demand all the time. And as we keep coming down, we just see some interesting. So smartphones prices are down. Telephone hardware, again, things that we may have seen a huge huge increase in demand and huge prices that went up when we saw that chip shortage about a year ago. Now we're going to start seeing the year over year prices declining because they're kind of adjusting back to what we might think would be the normal stuff. Alcoholic beverages, 5%, a little higher than what the target overall rate is, but still pretty much in that range. And you can see year over year prices, everything there kind of sticking around what we're seeing now, 7%. So nothing really increasing or decreasing that number. We still go down lodging and shelter. Things are again right around the 7%, higher than what we want to see. So rent 7%. Which is what we're seeing a lot of landlords, my landlord itself for this office that you see here, raising rates by about 8%. So that's right in line of what you would expect with what's kind of going on. Care of what's this health insurance rates going up, looks like. You just keep scrolling down, you can see admissions to sporting events going down. That's interesting. I wonder if there's anything on that somewhere. But you can get a bunch of different data. So yeah, so that's really what the data are showing this month for the CPI. There's a bunch of different tables you can see here if you wanted to look into more. But really, it's just if you're nerdy about econ and you're nerdy about prices and inflation, you want to learn more about it, I'll just go ahead and play around here on the BLS website. So if you go to subjects over here, you can go to Consumer Price Index, and there's lots of things that you can go through specifically here. With About CPI, the overview, it'll just teach you. So you don't have to have an econ degree. You don't have to go to a college and learn that. You can really teach yourself right here on the BLS website. So I hope you enjoyed this kind of impromptu just chat about the CPI data. I'm going to throw this up on the channel. If you did like it, feel free to comment, like the page, subscribe. And the next time we have some data out, I might take 20 minutes and chat about it again. Either way, thank you all so much, and we will see you next time.